A lot of people are in this boat right here. They're in this part right here. They look at a ledge, they can't see anything but down, right? There's this massive gap. They can't seem to get to point B, right? What they want to do is get to point B. They've got no clue, right, how to get there. So what we want to do as future employees, as people and as professionals, is come up with a way to solve that problem. Make it so easy for them that they can go ahead and march on by and make it such a good experience for them that they go on to point B and hey presto, they find another gap and hopefully they find you or they call you to solve that problem once more. Let's get started, guys. Okay, so typical disclaimer for every financial professional, this is all general information only, not to be taken as personal advice, right? So webinar overview, a little bit about myself so that you get to, so some of you who may have not seen a few of the other webinars know a little bit about me, what to expect, how to go about solving problems or a way in which to consider solving problems to increase your income. Ways to increase your income, obviously, value for hire investments and the FIRE and the minimum viable lifestyle, and how to incorporate all of those things to actually bolster up your financial success into the future. So a little bit about myself. I started off, I was born in the Philippines. My mum's Filipino, dad's Aussie. The best decision of their lives, I just keep telling them that, I told them on the weekend, was the fact they moved over here in Australia when I was 10. I really honestly I can't even imagine where I'd be if we stayed in the Philippines. So I'm very, very grateful for that. But at that particular stage in time, I didn't have positive financial points of references in my life. The only person in my life who had a reasonable financial situation was my auntie, who lives down in Melbourne, and she's a doctor. So I thought maybe going down the path of becoming a doctor is the best way because that's all I knew. Right? So here I was, young person, reasonably smart-ish. I thought, okay, science is the way to do it. Go pre-med and then go med route. I went through, got my honors, missed out unfortunately on a couple of interviews for medicine, started to work as a research assistant and moved into a PhD. And during that time when I started to earn money, I started to invest and I started to read a whole heap of books about investing. Then I caught myself talking to all of the scientists on my floor about their personal finances, and I thought, oh, maybe I'm onto something here. And during that time, I actually picked up a couple of properties myself. One of those properties had renovation potential. We renovated it a couple of times and essentially replaced our income within a year's time. So that blew me away, and I thought to myself, wow, I think I'm onto something here. So why not explore making a pivot? Now, like I said earlier, my only point of reference financially was my auntie, and I didn't know anyone in the finance industry, so I had to go out on my own and find out how to go about getting in. Luckily enough, I was mentored by a couple of mentors at the time who then became business partners as I transitioned from science into finance. So I studied a Master of Commerce, majoring in applied finance, started at one of the banks, decided against sticking with the banks because it wasn't really quite right with the way they operated, and I wasn't feeling too comfortable, so I went down the independent space underneath my mentor's business. 2.5 years later, was a director of the firm, was going to become a shareholder, decided to start Plenitude Wealth off the back of building something a little bit more than just helping people build wealth and keeping the company profitable, right? So Plenitude Wealth is essentially a social enterprise that helps plant the seed of philanthropy. And we're obsessed about educating people. And the way we see it is if we can educate people and become one of the catalysts in their lives to actually help them achieve financial success, if we can plant the seed of philanthropy in there and actually tell them that it's okay to support local communities, whatever causes that they may believe in, I think we've done our bit. So that's why we're hell-bent on exploring that side of things and really just sharing as much information as possible. So I'm very, very grateful for Griffith University for actually bringing me back and inviting me along to speak to you guys. So went from science to finance and now to fatherhood. I've got 3 girls. Notice here we've got Ella, my little 2.5-year-old. Got Addie here, my 3.5, almost 4-year-old, and my 9-month-old munchkin pie over there, Cecily. So 3 girls and my wife, Sophie. Love of my life, happy days. Okay, let's get on with it. Moving on to the good stuff. So what to expect? The 80-20 rule and the low-hanging fruit. Now, some of you who may have seen this before, seen me present before, would have heard of this, right? So what is it all about? A little bit of a breakdown on that. I'll unpack that for you. And then asking you, well, what problems are you solving with cumulative income? How to increase your income, right? Multiple pillars of income that's available to you and what you should be doing to actually build that up over time. About financial resilience and what to expect in the next few webinars as well. So we'll be running 2 more next week and then the following week. And really, guys, like if I can leave something with you, make sure you leave feedback, because I'm here to provide you with as much solid information as possible. And if you come away with an idea or 2 or a topic that you'd like me to cover in webinar number 4 or number 5, I will happily do so. Yeah, good stuff. So what is the low-hanging fruit? The 80-20 principle. Vilfredo Pareto is a Italian engineer who lived in France. He became a philosopher, came up with this 80-20 rule. A lot of people call it the Pareto principle. And the idea is this: 20% of your actions creates 80% of your results, right? So why low-hanging fruit? Well, I tend to ask myself, well, what are the key things that I want to do to produce the maximum output? So in economics, right, they call this the law of diminishing returns. So what we're tapping into here is this gradient right here, right? Where you're getting a 45-degree angle, you're getting maximum output for as little input as possible. Once you hit a certain point, the point of diminishing returns, right, your output suddenly becomes a hell of a lot slower. Right? So what we want to do today is, what I want to do is cover off on what are the low-hanging fruits that you can incorporate in your lives and in your finances to ensure that you're going to win financially in the future. Yeah, this is all making sense. Can I get a hand up if it's making sense for you? Awesome, thank you very much. Awesome, good stuff. So the key to this thing is that you have to understand what are the results that you want in your life, right? If you can write those out, right, and make sure you write down what your lifestyle goals are and what your financial goals are. And if you split it down the middle and essentially write down all of the points that you want in your life and start setting some timelines associated with it, make sure it's a SMART goal, it's a specific, measurable, achievable, realistic, and in a time frame, right? Create that list and then plan accordingly so that you can make decisions to help you increase the likelihood of you achieving those goals, right? And we do not want to be playing in this space before we've tapped into this, because we really want to tap into as much of this as possible, because the point of diminishing returns is not really worthwhile, because an extra 20, 30, 50% of your time may actually produce an output of 10%. So the yield that you're getting is a hell of a lot lower. So what you want to do is tap into the low-hanging fruit that's available to you. Right, so what did Warren say? An idiot with a plan can beat a genius with a plan. So you need to start planning, right? It's as simple as, well, setting a timeline for a specific goal. And today we're going to be talking about creating an income. So what kind of incomes can you create in your life, and how do you go about building towards creating multiple pillars of income so that if something were to happen similar to COVID-19 into the future, A, you'll be prepared, right? B, you won't get affected at all, and C, you'll see opportunities that are available to you that you can hopefully tap into and put yourself in a much, much better financial and lifestyle position. Right? That's what this is all about. So I'm here to provide you with a few concepts and ideas to sort of store in the back of your mind for the next downturn, right? Because obviously right now we're sort of in a state of flux. We're trying to work out what's the best way to move forward, right? Very, very difficult to I guess, react the best way we can if you haven't prepared for it. So right now, what we want to do is prepare for the next one. Right, and ensure we have some damage control during this time. So previously in the webinar number 2, which is covered off in YouTube, we talked about the minimum viable lifestyle and the importance of having a buffer in place. right? So what a buffer does, it allows you to actually, it allows you more time, right? Especially if you don't have a job. So if you don't have an income, I should say. So can I get some hands up for people who have an income in the webinar, please? Hands up. Just want to get a good gauge on where you guys are at. Like, oh, an income can be government allowances, parents helping you out, job potentially, right? So those are the kinds of things. Okay, good. Thank you very much. Okay, now hands up for people who have lost all of their income and are now living on their savings, i.e. their buffer, and are sitting on this particular one. Hands up. Okay, so there's a few of you. So this is a key factor here. If you've got a buffer, what you really want to be doing is working out how much time you have on your side before you run out of buffer and forced to actually go and find a job or go and find an extra bit of income. In an ideal world, you want to supplement your buffer so that you can extend this line out even further, right? That's the ideal space you want to be in, right? So because savings buys you time, right? And time's the most valuable commodity that we have in our lives, right? So what we want to do is build towards something significant for ourselves by making multiple pillars of income, right? So next slide. So the cumulative earned income. So this one here is quite a busy slide, so I just want to kind of go through it step by step. So today is, if you add up all of the income that you have in the rest of your life, right? Today is the highest point, right? Obviously in the past, it becomes higher and higher and higher. So what you want to do is you want to protect your health, right? And you want to protect your income making capacity, right? As best as you can. How do you do that? You lower the risk of losing health so that you don't become disabled, for example, because unfortunate events may happen, right? And that'll lower your income earning potential. You may need to retrain, and therefore you lose out on this red part in terms of income, right? So what you want to do is understand that risks are okay, but you don't want to be taking unnecessary risk, because your income, your cumulative income in your whole career may drop considerably if you're taking ridiculous risks. So let's be a little bit smarter with our decision making, right? Especially if we've had a few drinks and the like, right? Very, very important, right? So it's at its peak today and only getting lower. So what we need to do is build our skill sets, right? Build our mindset and our frame of mind to ensure that this never goes down. We always want to hit potential, because this is maximum potential right here, right? We want to ensure that we understand the importance of health, right? Anything any questions on this? Is this reasonably clear? And what we ultimately want to do as investors is build up your capital, i.e. savings, to a stage where it starts to grow so much that the income that you get from it replaces the need for you to work because you don't necessarily want to work. Right? Now, if you love what you do, happy days, you can keep working for the rest of your life, but you're not forced to work anymore, right? So what we want to do is build, as an investor, build your income from your investments so that it will replace your current income, right? So that's the gig. So how do we do that? We need to find out what our ideal income is. Everyone starts at a different place, right? Everyone starts at, whether it be $0, $5,000, $100,000 if you're lucky, or if you're a person with a trust fund, you know, you're very lucky and your parents are helping you out, fantastic. But everyone starts at a certain stage, and everyone can hit an ideal income or set an ideal income goal, right? So what we want to do is hit that ideal income at a future stage. By doing so, we need to, that gets us to financial freedom, right? Where we're not forced to do what we don't want to do, right? How do we do that? We need to build capital, i.e. savings, right? Or savings, right? To produce the ideal income, right? So seminar number 2 covers off on this. So feel free to go back and have a look, or the webinar number 2, I should say, covers off on this. So feel free to go back there to sort of get the gist, a better understanding of this, right? So this is the investment income piece. So this is the back end of our investment journey. We pull a lever and produce ourselves an income, right? So what we ultimately want to do is increase our income. So we're currently studying, you guys, so hands up for all of the students in the room, please. Cool. And hands up for people who are currently working and are out of uni, the professionals in the room. Okay, good stuff. So majority students, awesome. So what we want to do is upskill, right? Because what we're doing is we're managing our resources. Currently, we've got time. We've got a low amount of skills because of our life experience are quite low relative to others who have studied and who have life experience and skills to provide workplaces, right? So what we want to do is we want to up our skills by using your time, right? And by having high amount of skills, this creates an income for you, right? So right now you're a student, and I'm inclined to think, well, what kind of skills can you put in your bag of tricks to produce a higher yield or higher return on your time? Because right now what you're doing is you're getting a job, right? And they're saying you're getting $20 per hour, let's say, right? So the question that you can ask yourself is, how can you actually increase that, right? So we'll be going through a few ideas today on how to go about increasing your income, whether it be in your job or looking for another job, or supplementing your current income by using the other free time that you have in your life, right? To build a business, for example, to sell some stuff, to potentially outsource or help people who are trying to outsource the things that they don't want to do in their lives, right? Or essentially train yourself to build an asset of sorts that'll provide you with a future income, right? So what you want to do is you want to solve problems. Before I get cracking on this, are there any questions? Is it all making sense? Hands up if it's making sense. Brilliant. Fantastic. Good stuff. So what you want to do, if you want to increase your income, the surefire way to increase your income is you want to solve people's problems, right? Whether it be your boss's problem, right? Let's hypothetically say, so when I was studying in Griffith, I was a pizza delivery driver, right? So I was getting paid $11 an hour. This was back in 2006, I believe. 2006. Maybe less, maybe 2005. Yeah, so I was getting paid $11 an hour, and I was getting like $1 or $2 per delivery, right? So I was solving the problem of delivering pizzas. Now, could I have asked for more? I could have. There's no reason there's no reason not to, right? Maybe the question that I should have asked my boss at the time was, how can I add more value, right? What do I need to do? What results do I need to produce for this business to increase your revenue, right? The money that's coming in through the doors, so that it can warrant a bit of a pay rise for myself, right? So that's one thing that you need to ask everyone. So what problems can I solve? How can I solve it better? What are the bigger problems that you have? And how much are you willing to pay for me to solve that problem? Because a lot of people are in this boat right here. They're in this part right here. They look at a ledge. They can't see anything but down, right? There's this massive gap. They can't seem to get to point B, right? What they want to do is get to point B. They've got no clue, right? How to get there. So what we want to do as future employees, as people and as professionals, is come up with a way to solve that problem. Make it so easy for them that they can go ahead and march on by and make it such a good experience for them that they go on to point B and hey presto, they find another gap, and hopefully they find you or they call you to solve that problem once more, right? This is how you become very, very valuable, right? This is when your time becomes increasingly valuable, and you can charge more for the hours that you work, because you've got some IP, some experience. And if you can take this particular lesson away from this webinar, you'll be in a much, much better situation, because everyone's got problems, right? So it's up to you to find the gaps that people are having issues with, because if you can solve that problem for them, I have a feeling they'll be happy to pay you for it. And if the problem is a massive problem for them, and if it's costing them, let's say $5,000, right? Maybe they'll happily pay you $2,500 for it. I don't know, something like that, right? So it depends on how you think. Like, you need to open the way you think, and because there's so many issues out there, that you may want to solve. And you got to ask yourself, what kind of skill set do you have? What resources do you have available to you? Do you have a car? Do you have the time? Do you have all of these things? And come up with a solution for people that are having those specific issues in your life, right? Any questions on this before I move on? It's about adding value to people, right? So I would suggest you would hone in to a specific individual, what maybe your family, maybe your boss, maybe an ex-boss, whoever it may be, and ask them, well, what are the issues that you've got in your life that I can help with, right? Or if you can look from afar and say, I notice that you're having issues with this. Would you be open with me helping you out with that? Because I think I've got the skill set to actually help you. This is why we're studying, right? We're ultimately trying to become employees or entrepreneurs where we build our own business to solve the problem. What is the gap that we're trying to fill in society so that our time becomes more and more valuable so that we get remunerated accordingly? That's the game that we're playing. Yeah. So find the gap in the marketplace. That's the kicker, because the larger the gap and the harder it is to fill that gap, the more you're going to get paid, because your income is directly correlated to the issues or the problems that you're solving, right? So the bigger the problem that you're solving, the higher the income that you should be getting. It's really as simple as that. Cool. So your mindset is key. So we covered this on webinar number 1. The key to this thing is to have a resourcefulness mindset, and it starts with understanding that there's a difference between a growth and a fixed mindset. We all have a different story in our minds, right? Everyone's been brought up in a different manner, right? Some were lucky and involved in families who are constantly talking about things to kind of improve, others not so, right? So what we need to do is understand that, you know, we can draw a line in the sand today, move forward with a little bit of confidence and say, look, I want to surround myself with people that got that growth mentality, who are trying to become a little bit more resourceful about their lives, trying to produce a better result, right? Looking for the 80-20 rule, trying to work out what are the low-hanging fruits that they can incorporate to get maximum results, right? Because what you want to do is you want to get to a place where you're really, really resourceful so that you lower your stress. That's the game. You really want to build this to a stage where you got low stress, right? Because anxiety will always be around if you're not resourceful, right? Because what happens is the world will feel like it's caving in on you. So the key to this thing is have that growth mentality, right? Always ask the beautiful question of how do I make it better for myself, right? And make sure that you reassociate this current experience. If you're having a tough time at the moment, understand that this is a reference point for you and use it to your advantage, because in the future, a lot of people who are in a hell of a lot more comfortable situations than you are right now do not have this reference point to go back to, right, when they're being tested in life, right? Right now you're being tested. So what you want to do is understand this, own it, remember it, ingrain it into your heads so that you can revert back to it at rougher times in the future and go, well, this isn't too bad at all. I went through X, Y, and Z, right? Cool. So to increase your income, we need to know that we've got skills and our labor are the main things that we're typically selling at the very, very start, right? So it starts with having a job, finding another job, right? And supplementing your income by utilizing your extra time, right? So the question that I have for you is, do you want that extra income, or do you want to build towards skills to increase the likelihood of getting a higher income in the future, right? Because if you're utilizing your time to get dollars today, what that's taking away from you is future large dollars that you could be upskilling for. That's why we're going to university, right? We go to university so we upskill so that we become a hell of a lot more valuable in the workplace, so that we're not stuck working in sort of a Woolworths or Hungry Jack's or wherever it may be, right? Delivering pizzas like I was, right? So we want to upskill, we want to become important and valuable to the workplace, so that instead of gaining the minimum wage or $25 an hour or whatever it may be, What we want to do is upskill accordingly so that we're getting maximum dollars for our time. Now, the time it takes to upskill will differ from person to person, and it will depend on what kind of goal you're trying to achieve, right? Some people will want maximum dollars because they're highly ambitious. Others will be happy with 40, 50, 60 bucks an hour, right? So you got to ask yourself, where do you want to be, right? What are you trying to achieve? Because if you're trying to achieve massive dollars, you may need to work on yourself, on your mindset, and work for free potentially. So you got to make sure that your minimum viable lifestyle, which was covered in the previous seminar, is you have enough money and covered on a week-to-week basis, because you don't want to be going backwards, right? So now, what is Fiverr? What is Airtasker? Everyone obviously knows Uber. Does everyone know what Fiverr and Airtasker is? Hands up. Okay, cool. So Fiverr and Airtasker is essentially like Uber, except you don't have to have a car, right? You can go on there and say you will happily do, let's say, Airtasker. You can fold someone's clothes. I know I can use someone who can fold my clothes right now, right? I can't be asked folding my clothes, excuse my French. I'm the worst at that thing, right? It just keeps piling up. So I just wait for someone to do it for me, unfortunately, much to the chagrin of my wife. So you're gonna ask yourself, well, can you do something like that? How much time do you have available? Because what you can do is you can go to airtasker.com.au. I think it's available on an app as well, and actually register yourself as a person that can help people do their tasks for them, right? So if you've got time up your sleeve, and if you've got transport to actually get to the place that you can do the work for, Airtasker is a great way to do that. Fiverr is a similar gig, right? Fiverr is a website where you can outsource your talents. So hands up for people who are graphically inclined, who can draw pictures and do some Photoshop stuff, Adobe stuff, potentially Premiere Pro, editing videos. Hands up for those people. Not so much. Okay, that's cool. So maybe helping buy groceries for some people who are scared of going out and contracting COVID-19, right? The coronavirus. That's an idea, right? These are the things that you need to consider for the time that you have. Asking yourself, how can you make use of your time so that you can produce an extra income for you to see you through the uncertainty? Yeah. Another option that you have is to sell your stuff, right? A lot of people here have a ton of stuff in their cupboards. They're all secondhand, and you got to ask yourself, is it actually useful? Is it something that you've used? Is it something that you see value in? Do you actually need it, right? There's this lady by the name of Marie Kondo. She says, you should be looking at the things that you have in your life, and if it doesn't spark joy, maybe it's time to throw it out, right? So if it's not sparking joy, if it's not something that you see value in, maybe you should create a pile and put it on Facebook Marketplace or eBay, right? Has everyone heard of Facebook Marketplace here? Hands up if you have. Great. Has any of you have any of you sold anything on Facebook Marketplace? Hands up if you have. Okay, cool. There you go. There's actually a massive market out there. You'd be surprised. So obviously it's all available. So right now we're in Southeast Queensland. You can set yourself up so that people will come and grab your stuff because they value it, right? So obviously stuff that you don't necessarily need in your life anymore, and you'd be surprised how much money you can actually gather from selling the stuff that you don't need anymore, right? Too many people get too obsessed and too kind of connected to these things that actually aren't worthwhile being connected to, right? So you may as well sell it. If you need the money, desperate times calls for desperate measures. So you need to find ways to actually build that up, right? Maybe building a small business is a way to go about doing it, right? So for example, my wife has started this Etsy shop, right? She's a bit crafty, so she creates crafts and she chucks it on Etsy, and it's essentially a marketplace for all around the world, right? And you can sell it. Now, obviously the product's got to be reasonably good to actually sell a few, but if you like that kind of stuff and if you're crafty, maybe it's worthwhile considering what Etsy can provide you, right? So these are the low-hanging fruit that you can use for your time to sell your stuff on Facebook Marketplace and eBay, right? And potentially start a little shop right, with Etsy and create a PayPal account to supplement your current income or replace your current income. Right, so these are the ideas that we can all do. And obviously, skills and labor is a big one, where you just find another job or upskill and get a promotion in your job to increase your income. Any questions on these before I move on to the investment piece? It's all making sense? Cool. Hands up if it's making sense. Awesome. Good stuff. All right, on to investments. But before that, actually, 7 pillars of income, right? So there's the earned income, which is the person, right? Profit and royalties, which is a business. And dividends, rent, interest, and capital gains, which is what investors typically get. So what you have to ask yourself is, where do you want to play? Most people, unfortunately, are only aware of one kind of income. So what I want to show you today is this particular idea. It's okay to work towards multiple sources of income. So if you get earned, maybe you can get some rent or some interest, right? Build capital gains, build some dividends. This is the low-hanging fruit right here. Be an investor and be an employee for somewhere, right? Where you're getting an earned income and getting dividends, rent, interest, and capital gains, right? Building a business is not quite so easy, but if you can get that right and be all three and actually earn 7 pillars of income from different sources and build it up accordingly and build multiple business times over, right? You can see how one event in the world won't ruin your chances of earning an income, right? Any questions on these at all? The different kinds of income available? No? Cool. Good stuff. So has anyone heard here of a person by the name of Robert Kiyosaki, who wrote Rich Dad, Poor Dad? Hands up if you've heard of Robert Kiyosaki. Rich Dad, Poor Dad. So this is his particular drawing right here, the cash flow quadrant. E stands for employee, S, self-employed, I, investor, and B is business owner. Most people will be sitting in this quadrant, right? Here in Australia, we're lucky because we've got superannuation system. So we've got the majority of people are here because of their super alone, right? They actually don't invest. Their money's being invested for them by the super funds, and the government's helping them out by forcing their employers to actually put some superannuation money away. Some people will venture out to become self-employed and be specialists in their fields, right? And the lucky ones, or the ones who actually work hard enough or strategic enough, manage to build a business, right? The low-hanging fruit, guys, is these two here, right? This one's reasonably difficult. This one's the hardest out of all of them, right? So this one's the easiest because you've got massive certainty in there. Self-employed is good because you can actually charge a premium for your time, right? If you know what you're doing and if you actually add value, solve that problem, find the gap and actually provide a solution to the problem, right? And then an investor, I think this one, a lot of people are sleeping on, right? Because they just think that, the future will come and it doesn't really matter so much, right? So today we're going to be talking about, well, how do you go about building that investment portfolio? Yeah. Cool. So before we do that, we need to understand the power of a return on investment, right? This is the rule of 72, right? So if you've got $10,000 to invest, let's say in 1, 2, or 5 years time, whatever it may be, however long it may take you to save that much, maybe you've got more, maybe you've got less, whatever it may be, you have to have a starting point, right? With that starting point, you can produce a return on investment of a range from 2 to 15 to 100 to 1000%, right? Whatever it may be, depending on where you put it towards what kind of underlying asset you buy with it, right? Some people will manage a 2% return on investment. The rule of 72 states that if it's 2% return on investment, what you typically do is you go 72 divided by 2, right? 72 divided by 2 equals the number of years it will take to double, right? So if you go 72 divided by 5, it'll take you 14.5 years. 72 divided by 10 return on investment, it'll take you 7.2 years, right? 72 divided by 15, 5 years. So what you want to do is you want to double this thing, right? As macabre as it may seem, right, what we want to do is similar to what what coronavirus is doing, right? Like it's doubling really, really quickly all around the world, right? So we want to get multiple doubling cycles, right? And how do we do that? We need as high a return on investment as possible. So how do we go about getting a higher return on investment? Right? We need to understand that there are different kinds of asset classes that we invest in, because your return on investment will determine how much wealth you end up with at the back end of your investment journey, right? And how much financial and lifestyle options you're going to have throughout this whole process. Every single year counts, and you need to make sure that you're working towards better results every single year. So how do we do that? We set an ideal income goal, right? It takes a while to build, but what you can do is you can create a cash flow management system, which was covered off last webinar. Consistency is key, and build towards a savings plan that you can put towards investments so that it can create an income for you in the back end of your investment journey, right? Some people may take 10 years, others 15, others 20. Most are on a 40 to 50 year time frame. If you're strategic about it, if you know what you're doing, if you'll happily learn more and spend your valuable time learning from people like myself and others out there who are happily providing this information for free, right? You can actually speed up the process for you dramatically, right? So what you want to do is you want to build your savings so that you've got a chance of hitting your ideal income. This is the place you want to be. This is where you want to end up. Most people are on a trajectory like that, and it'll take them 50 years or more to actually achieve it. They may die before they even get there. They might not even get to their ideal income, right? If you're a good saver, it's looking like that. So if you're strategic about it, you can save a number of years, right, in your life, in your investment journey, by increasing your return on investment, by lowering the tax payable, and by consistently saving and lowering the cost associated with your life, right? Cool, so what are the investments available? Now, first and foremost, you got to ask yourself, what kind of investor do you want to be? Do you want to be an active investor or a passive investor? Most people are happy to be passive investors, which means they're just putting dollars in every single week into an investment account and let it grow passively over time. Not everyone can beat the market. Studies have shown that only 4% of managed funds out there for actively managed portfolios actually beat the index, i.e. the market itself, right? So you're going to ask yourself, do you think you've got the capability to actually beat the market by yourself? If you don't, a passive way to invest is probably the best way to move forward. So how do you go about doing that? You have to start a portfolio. How do you do that? You can look into ComSec, right? You can look into Raise, right? Raise is a platform that allow you to put $2 in to invest slowly, right, and grow it over time. You can look into Spaceship, right? These are the options you have available to you as an investor, right? There's the ANZ equivalent for ComSec, right? There's the Westpac equivalent as well. You can go to a financial advisor where they can help you out. But at the start of the process, if you don't have much, what you want to do is learn about this yourself, because in an ideal world, you don't necessarily want to get any help, right? But if your time becomes a hell of a lot more valuable, right, and you can't spend the time because of the work that you're doing, and you can't spend the time doing the research, and you're better off delegating it out, maybe that's the best way too. So everyone's different. So you're going to ask yourself, how does it work for you in your life, right? Because money is the best employee. Why is it the best employee? Because it never stops working for you, right? It works 24/7. I don't know about you, my employees are working about 40-hour weeks right now. If I can get them to work 24 hours a day, 7 days a week, oh my gosh, we can get a whole heap of stuff done. But that's obviously illegal, so we can't do that. But when it comes to money, right, what happens is you can get your dollars to work for you very, very hard, or not so hard, quite conservatively, right? 24/7, 24 hours a day, 7 days a week, 365 days a year. Right. So what are the investment options? So this is a common diagram for a lot of investors who are just starting out. Right. So this is the risk return profile. So what happens here is the higher the risk, the higher the return typically. Right. So what are the options out there? Most people know about cash. They have their access account. They have their savings account. And the typical return on investment on cash is approximately 1 or 0.1 to 2% in the current environment, maybe a little bit less than 2%. There are fixed income investments out there that are producing 2 to 6.7%, right? There's property investments out there that are producing 7 to 12% per annum. Right? There are shares out there that are producing 7 to 20%. The problem with this part of the diagram is that assets can increase in value but can also drop in value. Recent market movements has forced the market to go down because of what COVID-19 and its effect on the Australian economy and obviously economies around the world, right? The property and shares, these asset classes have taken a bit of a hit. The fixed income and the cash, on the other hand, hasn't, right? So the income that they're producing, right, for cash is interest, for fixed income is interest as well. They do not go up and down in value. So they're not called this word called volatile. They're not volatile. They don't go up and down in value. Whereas property and shares do. They go up and down in value. Shares more so than property because you can buy and sell shares really, really, really quickly. Therefore, the prices fluctuate accordingly, right? So with property, there are different kinds of properties that you can invest in. There's obviously residential property, commercial property. There's airports that you can invest in. All kinds of properties that you can invest in, right? Question that's come up, what do you think about Bitcoin? Look, is Bitcoin a scam? No, Bitcoin is not a scam, but it's a bit early days. I tell you what, if you got in early, holy moly, you could have absolutely killed it. Unfortunately, I didn't. I know a few people who have absolutely smashed it, like by putting a few $1,000s on that thing. I wasn't game enough. I didn't do enough. I didn't know enough about it, and they unfortunately didn't make a move. Right? Each to their own. Right? It comes down to what kind of risk is it. With this kind of drawing, the risk of the Bitcoin was probably up here, and I was inclined to think the return was down here. So maybe it wasn't worthwhile. That was my my thoughts at the time. Therefore, I didn't invest. I was wrong. It's actually up here. The return was up here. So maybe it would have been good to put $1,000, $2,000, $5,000 towards it. But you know, hindsight's 20/20. And we don't have crystal balls, so we can't really make those calls. So if you've got a small bit of cash, it's a speculative play, right? So if I was to advise someone about Bitcoin, I'd be looking at maximum 2 to 5% of what they're willing to invest for their portfolio, right? Maybe even 1 to 5%, depending on their comfort levels. If they don't understand it, don't invest in it. It's really as simple as that, right? Are term deposits an example of fixed income? No, I'm inclined to think term deposits are cash, right? Cash, because there's hardly any risk in them, right? So for example, with cash, the government will guarantee you up to $250,000. Therefore, that's zero risk. Like the banks, for example, CBA, if you've got $250,000 in CBA today, and then CBA went bust, the government will guarantee that $250,000. Therefore, There's zero risk. And that's why they only provide you with a low return, i.e. 0.1% up to 1.7 or so percent, which is the current rate that they're providing in the savings accounts at the moment. Right, so what are the other fixed income accounts out there? Our fixed income investments? Well, there are these things called corporate bonds, which is basically businesses that are hoping to raise some cash, right, to invest into projects that they really want to get started on. Therefore, and then with that in mind, what they do is they go to market and say, look, we want to borrow $200 million from the market. We're happy to pay 6% per annum for the $200 million. We're looking to get the project done within a 7-year period. So as investors, you can choose to plow your money in there for 7 years. You will get 6% return on investment for 7 years. Unfortunately, your money is locked up unless you can find someone else to buy that bond off you, right? So that's the difference. So you sort of, it's similar, but not exactly the same, because there's a little bit more risk, i.e. this one, you got a $250,000 guarantee. This one, if that company that was asking for the money goes belly up, goes bankrupt, or they close down, goes into administration, right? Unfortunately, you may have the risk of losing some, if not all, of your income, right? This is why there's a risk return profile, right? Obviously, with property and shares, it's the same deal, right? As soon as you get in, you're buying a portion of a property or the whole property, depending on what kind of property we're talking about here. With shares, you're definitely buying a portion of a company, right? That's what shares are, right? So, for example, let's call it Google, or let's call it Netflix, right? Netflix has been chopped up into millions of shares, and what you can do is you can buy one share of Netflix, and what you're basically getting out of that is a dividend, which is a form of income, right? And every single time they make money, and after they've paid all of their costs, the bottom line is the profit. And that profit, after they pay tax on that profit, they can redistribute back into their business to reinvest back into the business, or send it through to their shareholders, right? This is what we're doing as investors. We're buying into portions of businesses that we deem good and solid and profitable into the future, right? A lot of people fall in love with the fluctuations of the market. But ultimately, as investors, what we're trying to do is produce an income for ourselves in the future. Yeah? Any questions on these? Is it all reasonably clear, guys? All good? Good stuff. Moving on. So what you want to do as an employee and as a worker and as an investor, right, or business owner, is you want to get to a stage where you get to financial resilience. And how does that feel, right? The feeling is no matter what happens in the world, right, you're essentially covered, right? Because you've built multiple pillars of income, right? So back to the 7 pillars, right? So you've got, where are they? It's the next one, I think. So the 7 pillars of income, if you can work towards building all of those pillars, what happens if this is your life, right? If one goes away, right, the six other bits of income will actually cover you. No issues whatsoever. If 2 goes away, you're still fine, right? If your only income is your earned income, this is the diving board strategy. If this one goes, guess what? Your whole life goes down with it, right? Increases uncertainty, increases stress, and then this is when life unravels on you, right? So what you want to do is you want to add multiple sources of income to prop yourself up for the uncertain or for the events that you haven't planned for, so that you know you're safer, right? How do you do that? You need to gain knowledge, similar to what you're doing today. Now you got to sit through some of the stuff and listen to people like me, unfortunately, right? Once in a while, or listen, like if it's making sense, just plow into the content, right? So if it's making sense for you guys, look at my YouTube content, look at my Instagram. I post every single day on Instagram and on LinkedIn. Link up with me, happily link up with you guys. I'm always sharing financial content out there, and build up your knowledge, right? What happens is over time, you become more and more knowledgeable, which leads to confidence, right? And with confidence, it increases the likelihood of taking action, right? And with action leads to results. And with results, and especially positive results, lead to resilience, right? Not all results are positive though. So sometimes you got a negative result. The key thing you need to take away is that with a negative result comes a lesson, right? We have a little saying in our house, right? I get my daughter to say it every single day. Mistakes are learning opportunities, right? So a negative result is a mistake potentially, right? And it's a learning opportunity. So how? You gotta ask yourself, how can you make it better? What can you change next time, right? If you're in a similar situation next time, guess what? You're gonna be better because you're gonna be well prepared because you've thought about the differences that you could have made to actually put yourself in the best foot forward, right, to achieve your goals. Any questions on this before I move forward? All good? Good stuff. So bring it all together. Look, so we covered off on low-hanging fruit, cumulative income, and how important it is to sort of protect yourself and not making too many risky behaviors, right? Asking what kind of problems can you solve to increase your income, right? Ways to increase your income, obviously understanding that there's stuff out there like where you can sell some stuff like Facebook Marketplace and eBay, right? There's Etsy if you're crafty, or if you can run a little business, right? You can create products and actually sell these things out there. Yes, it's a little bit more difficult, more technical. Maybe if you don't have the time to do that, you can put that aside, but have that in the back of your mind that it's something that you can explore in the future, right? Investments is a no-brainer. You can tuck away $1, $2, $3 per day, or $100 per week, whatever it may be, whatever you can start off with. If you watch webinar number 2, we'll go over a cash flow management system that allows you to tap into consistency, right? Because consistency allows you to have time on your side. And the last thing that you want against you is time, because time can ruin every single one of us. So how do we have that? How do we get time on our side? We need to build the right habits, right? We need to be consistently using it and putting something in place so we're getting consistent small wins throughout our life to ensure that we're building massive momentum into the future. Because as you can see, like with the wealth curve, what you're trying to do is build momentum so that you get that lift off. So the good savers are already on that 45-degree angle. So the people who are investing better, who are strategic about the way they think, who set themselves goals for passive income on all 7 different kinds of incomes, right, will increase the likelihood of doing this, right? Having a cash flow management system is one of the starting points of getting to financial freedom, right? Cool. So we talked about the different kinds of pillars of income and financial resilience. Like, I would love for you all to get to a stage where nothing in life can affect you financially, right? Because if you can get to that stage, what happens is you're freed up. If you can produce an income, a different kind of income somewhere down the line, and create and lock it in for you, what you can do throughout your life is actually pursue your passions, pursue what you value most, rather than being forced to do what you don't necessarily want to be doing. That's what getting financial freedom is all about, right? It gets you to the resiliency where you know that you can't be touched, right? That's what I'd love for all of you to get to. So future webinars, we're looking at navigating bureaucracy. What kind of paperwork? How do you go about negotiating? How do you go about getting debt potentially? This is in webinar number 5. To increase the likelihood of your finances being solid into the future. We're obviously guided by you, so please provide us with some feedback. Like, do you want to know what I would be doing if I was in your shoes? How do I speed up the process of buying my first property? There's a whole range of different topics that I can cover off on, and I'll be guided by you guys. So make sure you provide us with a ton of feedback. Feel free to chuck it on the webinar chat or the Q&A right now, because I will take notes. I will make sure that I capture all of those things so that I can cover off on as much of this information as possible, because we don't want to walk away from you guys and not provide as much value as possible. So hopefully that was helpful. Can I get a hand up if that was helpful for you guys? Awesome. Good stuff. If you've got any questions, please feel free to fire them through. We've got a few more minutes to go. If you've got some comments, feel free to chuck them on the chat. You know, it's all about feedback, guys. We can make this better for you. So make sure you provide us with feedback so that we can get on with it. Feel free to follow me on Instagram, LinkedIn, follow me or subscribe on YouTube. Watch me dance with my little munchkin on TikTok if you're inclined, and like us on Facebook there. I have a couple of questions here. Hi, I've attended your past workshops as well as today. How can I access your recordings to re-watch? Really enjoy your knowledge. Fantastic. Thank you very much. Look, just go to youtube.com or open up your app and type in Andrew David Courtney on the search bar, and you'll see me, hopefully. And if you don't see me, type in Andrew David Courtney Griffith. You're bound to see one of the webinars that I've ran. And this one will most likely be up by the end of the week as well. I'm hoping to get this up by the end of the week so that all 3 webinars will be up there. Awesome. That was helpful. Thank you very much, Andrew. Much appreciated, mate. Happy to help. If I were to invest in shares, would ETF or index stock be the most safe option? Look, shares right now, you have to understand when you're investing, you gotta set yourself a timeline. When do you need that money by? Are you trying to get a quick win? Because if you're trying to get a quick win, it's probably not ideal to be investing at the moment. Right? If you're happy to leave it in there for 5-10 years, I'm inclined to think, well, maybe let's see. I'm inclined to think that there's more damage to come with the COVID-19 thing, right? So the whole world hasn't flattened the curve yet, right? And there's going to be some reporting season is going to happen in June, July. After that, in my opinion, there'll be a little bit more carnage in the market, and the best time to buy is at the lowest part. Now, we're never going to know when the lowest part is, but you don't want to be buying at the peak when it's dropping, right? Because you don't want to be putting your hard-earned savings into something that is dropping in value. So what I'm getting my clients to do, and this is obviously just general information only, is if you're not comfortable with losses, I would trickle funds in over a year, right? Let's say you've got $10,000. What I would do is divide that by 12. Let's say $12,000, $1,000 per month. You put it in every single month. If you don't know what you're doing, into an ETF, right? Into a balanced, diversified portfolio potentially, right? Some things that you could look at is Vanguard. So really, really cheap funds. Check out Vanguard, right? If you want an active one, you're looking at Russell, right? Fidelity. These are the kinds of options that are out there, right? If you just look up ETFs. Now, with ETFs, you actually know what you have to be looking for, right? Diversify your funds accordingly. You don't want to put all your eggs in one basket, yeah? Very, very important. Cool? Awesome. What is the best way to start investing online or through mobile apps that are passive? With how much should I start? Matt, look, the best way to start as an initial investor is go and download the app Raise. It will literally allow you to invest 50 cents. Case closed, right? You can start your investment portfolio tomorrow. Now, the key to this thing is that you put it away and you forget about it. You forget about it. A lot of people ride the roller coaster ride and freak out and take the money out and stop investing. What you need to understand, it's a long-term time frame. Get educated, follow people, read books, follow me, ask me a bunch of questions, learn from people, learn from professionals, and actually build your knowledge base so that you can make strategic moves to build your wealth faster. The ETF space and the slow dollar cost averaging is one of the foundations of investing. We cannot ignore that, There are other ways and means to build wealth as well out there. And that creates knowledge to build enough confidence to take action. Right? Final question. Amazing. Thank you. Well, thank you very much. Thanks very much. Much appreciated, guys. Look, if you've got any feedback, please feel free to let the Student Guild know or the Student Representative Council. I would love to hear more of your thoughts. And if you'd like for me to cover on specific topics like potentially buying your first home, how do you speed that process up, what I would be doing as a second-year student or third-year student, whatever it may be, right? I will happily run through a case study if you'd like. You know, just fire them at me. If you've got any ideas, let us know. We're here to help, right? The Student Guild and the Student Representative Council are here to ensure that your experience as students is a positive one, and we're trying to enlighten you about ways, the mysterious ways of money here. It doesn't have to be complex, guys. If you're consistent with your actions, and if you take control of what you can control, you can actually build something significant for yourself. And with financial, with a solid financial base comes massive opportunity and options for yourself, right? You don't want to be tethered to a job that you don't love because you're financially stuck, right? By understanding the key tenets in these particular webinars, you're going to put yourself in the best position to win. Cool. Any final questions before we move forward? Awesome. One last time, guys, I might ask for a last favor. Hands up before we finish up. Hands up. Raise those hands. Thank you very much. Show your appreciation. Thank you, thank you, thank you. Very weird to be talking to myself in the middle of a room right here. Thanks very much. Okay, awesome. I want to invest in the stock market. I need your help. Give me a call. Follow me on Instagram. Happy to answer. Take the conversation off and let's do a DM. Follow some of my videos out there as well. All right, guys. All the best. Thank you very much for your time. Looking forward to seeing you next week. Cheers. Ciao.